Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 27th thoughtful Thursday edition of today's opening call on the Trader's Edge. Folks, I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you the tools that will help you to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool. This is my favorite tool, really. It's called an attitude of gratitude. So I've got a question for you, and think about it. You know, everybody is up so far this morning, and do you awaken every morning full of appreciation for the life that you live every day? Think about it for a moment. Is that how you wake when you wake up in the morning? Is that the first thought that's on your mind, or do you ever think that, or maybe you think that you've got to think long and hard before finding something to be grateful for? Well, let me tell you, the absolute best way to wake up, the very first thought on your mind should be something that you're grateful for. You know, I love the emails that I get from each of you out there, all the listeners. Keep sending them. I respond to all of them. I love getting them. And oftentimes, yesterday included, a listener asked me, how do I find, and he was referring to himself because, he was asking, how does he find passion in his life? The question was, how does he find direction? How does he find the strong reasons why? So we know that he certainly was listening in on the show, because I tell you, folks, it's important to understand your outcome, but then next you need to have strong reasons why. So a great question out there, and I say the answers, folks, they always lie in one spot. They lie in that area that's deep inside you that sometimes just goes overlooked. It is that area of gratitude. It's about having an attitude of gratitude. So if you've got questions out there that are why, just simply step back. And the real question is, and this is what I would be asking myself, and this is, in fact, what it is that I do ask myself. Don't think that myself or any others don't have to battle the demons that are out there, and whenever they do decide to, show up, all you've got to do is just say, what is it that you're grateful for, or better yet, what is it that is in your life right now that you are taking for granted? That's really where it starts, because there are so many things that are in your life that are in each of our lives that we just simply take for granted. So what I want you to do, and just do it right now, focus on, what things do you take? Just write down two things, just on a sheet of paper here. You've got a sheet of paper. What are two things that you absolutely take for granted? What are the first two things that come to your mind? There is not a right or wrong answer out there. And then maybe you can want to expand upon that list, because oftentimes what really stops us from taking action, folks, is the attempt of trying to get to that standard of perfection. You see, if I asked you to write down two things that you take for granted out there, and you had to think about it, what you were really trying to do is try to come up with the perfect answer. That is the absolute lowest standard that is out there. You can never attain perfection. That's oftentimes what stops people from taking action. I say take massive action, and it was Terrific Thursday, where Dave was on there talking about taking massive action, at the beginning of the show here. And so that is a beautiful thing. Perfection doesn't exist, folks. What exists is outstanding. What exists is extraordinary. Those are the levels that you want to just simply be able to attain. I take for granted the ability to nearly instantly take a look at a stock chart, or it doesn't matter what kind of chart it is. It could be commodity chart, futures chart, and immediately see some different patterns that are in there. Maybe it's volume patterns. Maybe it's A to B equals CD. We're going to take a look at those certainly during the day here. Yet I couldn't be more grateful for the ability to be able to do that, for the opportunity to be able to do that for myself, to be able to share that with you. And yes, when I wake each morning, I am absolutely eager. I fully appreciate the life that I have here today, and I do want to do more. I hope that's what each day we should want to be able to do more. Will I get everything right? Absolutely not. But I will attain, folks, I promise you, I will attain an outstanding, extraordinary level out there, and that is where you should be living as well. There are so many things that are in our lives right now that just simply weren't there last year. So when I ask you the question, what is it that's in your life right now that you're taking for granted? Just think about what's in your life right now today that wasn't there last year, that wasn't there 2 years ago, 5 years ago, 10 years ago. You'll have a huge list out there, and that, folks, ends up becoming your gratitude list. So gratitude, folks, I'll leave you with these thoughts here. It touches the ultimate foundation of our human existence, for there's hardly another quality within each of us, folks, that is so suited to reveal the real state of our own capacity out there. No one can be grateful to himself for gratitude, folks. That goes to another person out there. And, folks, that's why I am so grateful for your presence here today. Gratitude goes from one person to another. It is just that simple. An attitude of gratitude. I promise that is what will work for you. So let's go take a look at these markets out here. We've got the futures up right now. You've got the Dow futures up about 59. The ES Mini, that's what we're looking at on my screen here. If you are following along on Tiger TV, maybe you're listening on tfnn.mobi on your mobile device. Maybe you are just simply watching or listening to us on the radio. We thank all of you listeners out there. You can always catch an archive of this show. Even if you're watching here live, you can always catch an archive of this show on Channel 9 out here. If we take a look at what else is going on in the markets around the world, it was flashing green last night. You know, things kicked off. We're going to take a look at our ES Mini here, take a look at where it traded down into, which was Uncle Ben Day. And so we'll take a look at that. That really lasted for about 30 minutes before the market pushed its way up, just slightly above the QE3 announcement. So we'll certainly take a look at that. You've got gold trading up $13. You got silver up 37. Light sweet crude up $91. You know, when I came on the air yesterday, I was talking about the Richard Arms Trend Index, how on Tuesday it had finished just above 3.0, suggested that a bounce would happen. It was pretty tepid, that's for sure, yesterday. We'll see if that bounce has any legs to it here this morning. Excuse me. Around the world, things were really kicked off in China. They pumped more money into their economy out there, or that's what they plan on doing. And you had the Shanghai up 2.6%. Excuse me. Thank you. Excuse me out there. Don't know where that came from. And so up 2.6%, closing up a total of 54 points. We'll take a look at that as well. Over in all in Asia was up. You had the Nikkei up last night, about 0.5% up, 43 points. The Hang Seng up a little over 1%, up 234 points. The DAX right now this morning up 0.3%, up 22 points. The FTSE up 15. So it's green pretty much across the board, with the exception of the King dollar down 13 ticks. Not a big deal out there. 877-927-6648. We'll also take a look at what's going on in the pre-market. I can tell you that Tempur-Pedic had a good night's sleep last night. They closed out at $26.78, and they are trading out at $31 even Steven right now. But first, let's go back to the ES Mini. Let's take a look at what was going on here yesterday. Let's pick up where the ES Mini left off. And if you're taking a look at Tiger TV, one of the lines that you see here on the screen, it's the red horizontal line, goes all the way back to the low. It's not really a swing point low. It's close to a swing point, but it really was where, you know, Uncle Ben announced the QE3. Then not where he announced it, but where the notes, where the FOMC notes were released out here. So the low of that is 14.4025. So if you take a look at the A to B, we showed A to B equals CD down. I'll go ahead and paint that on the screen here real quickly, and then we'll go ahead and take it off. Your A point was the high, coming in at about the price point of 1465. Back in September 14th. Again, we're looking at a 30-minute time frame chart out here. As we take a look at the A to B equals CD, you can see it did over 1 to 1.272. In fact, it got very close to 1 to 1.618 level. That would have taken you to 14.23. If we take a look at, I'll erase the line now, we take a look where the ES Mini actually traded down to yesterday. Coming into the 11:30 time frame, it got down to 14.24. 1 point away. That works for me with regard to A to B equals CD. You then got a confirmation on that next candle. You got a bullish engulfing candle. And folks, if you don't understand the language of the markets, go over to the homepage at tfnn.com. A great place to start is under breaking news. You will see a special report, a free report that I've done for you that is called Candlesticks, Silent Signals. You certainly want to download that report. You want to download it. You want to print it, because if you do understand, if you do trade candles, I'm going to teach you something about the hammer candle that absolutely nobody else teaches you out there, and you want to make sure that you understand that. If you're just new to candles, go take a look at it, because this is where you want to start. If you want to understand what the market is doing, you want to understand what the bulls and bears are telling us. Well, if we take a look at the bulls, you know, I don't know if it was Uncle Ben or who it was that was stepping in, but certainly they didn't like price being below the Uncle Ben date out there. Of course, the bounce here was pretty timid. Of course, it was the candle following following that bullish engulfing that told us that not a lot of conviction behind the move. And really all that it did was just moved up a few points, got into the 2 o'clock session, got up to the high of 1433.25, pulled back, did about a 78% retracement before it started moving higher. It has it's coming close to completing. It's close enough for my work. The 1-to-1 A to B equals CD at the 1436 price point. So far you've had at about 2 in the morning, excuse me, at 1435.25 was the high. Coming into the open here at 9 o'clock between the 8:30 and 9 o'clock session. We did have some numbers released. You had the jobless claims. Jobless claims were down 16,000 to 359,000. That was more than what was expected out there. And then you had the flip side, which was that the economy grew at a slower pace. It grew at a GDP rate of about 1.3%, a little bit lower than estimated. So you had futures kind of going up and around and really just moving sideways when we take a look at it. They're trading out right now at 1434. Haven't really seen the bearish signals out here. Does suggest to me that futures want to travel a bit higher. That area is likely going to be 1438, 1441. But let's go take a look at just simply the retracement levels. And we'll take a look at the most logical retracement level. That's going to be coming off of the high out here at 1130 on September the 25th out here. The price point there was 1457. If we go from that high down to the low that was put in yesterday at 1130, you'll see that the 0.382 retracement, 1436, folks. If that area holds today, man, the next leg down, that could be a doozy. Anyways, 877-927-6648. I suspect the ES Mini wants to get up to 1444, though. Give us a call, folks. Hope you're having a terrific Thursday. I know I am, just being here with you. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You know, and 48 hours from now is going to be an incredible, extraordinary event. If you are anywhere in the Florida area, heck, even if you're not, just come on down. I mean, the weather couldn't be better. But 48 hours from now, folks, over at the Hyatt in the Grand Hyatt in Tampa is going to be an outstanding workshop. It's our Nadex workshop, going to be kicked off by Tom. Tom is going to teach you about some, show you some of the great trading tools and techniques that he uses out there. He's going to go ahead and put that together with Daryl White. Daryl does our 1 to 2 o'clock show out here at on TFNN, and Daryl's going to show you how to best take advantage of the Nadex trading platform. We're going to take a look at one of the Nadex trades that we put on last Friday. If you didn't catch that and you're interested in Nadex, you can go take a look at the archive show. Go ahead and fast forward to about 10:30 on Friday. That would be on Channel 10 out there, and it'll give you an idea of how you can put Nadex to work for you. Come to the homepage of TFNN.com, click on the link. It'll give you all the information, and it's going to be an absolutely fabulous workshop. Lasts till noon, so it'll get you out in time to go watch either the Ryder Cup or some of the great college football games that are sure to be going on. So check out all the details. They're on the homepage of TFNN.com. Talk about lines being drawn in the sand. That's where we're going to go to next. I think this is perhaps the most important chart for us to be paying attention to today. This is the NASDAQ futures. Normally we start off just simply taking a look at the S&P 500. Why? Couple of reasons, because there's a couple what I call lines in the sand out here. Now, the first line where you see, if you are watching on Tiger TV, if you're not, the price point that we're looking at is the high of the candle session on March 28th. That would be 27.90.25. That is where I call the line in the sand. Why do I call it that? I'm glad you asked me that question, folks. It's pretty simple. It's because that area is an area that was very strong resistance. That was taken out. It was taken out with conviction. It was done on Mario Draghi Day. That was September 6th out there. So you're going to see two lines as you're taking a look at the charts. But that area was tested back in April. It was tested on April 3rd, 2012. It held. You had a bearish engulfing candle on the next session on April 4th. This area held again on August the 21st, August the 23rd, August the 22nd, August the 27th. That area, folks, was tested numerous times, even the 28th and the 29th. Basically, the entire last week of August, maybe the last couple of weeks of August out there. So that area became a very strong area of resistance. Now, once you get up over resistance, it should act as support. You can see the market pulled back down into it. You got to give it just a little bit of room here, folks. Pulled back down into it, really for two trading sessions. September 11th, moved out on September 12th. All that was doing was coming back into Mario Draghi Day. That's when he said he would save at least his part of the world, and that's why you see that large up spike. The bottom of that candle is 27.6650. I say you break that area, And boy, the central banks, you got to ask, are they on vacation? Because they're the ones that are supposed to be out here pushing the markets higher. If they've just simply left, then this is the area that you want to be paying attention to. Again, on the NASDAQ, you're looking at the NASDAQ futures, you're taking a look at that price point being 2766.50. Now, that area was tested yesterday. You got down to 2762 and a quarter. You closed above it. So, the, Super Mario line has been drawn in the sand here. You can see now what happened today, pretty meek when you take a look at the bounce so far in the NASDAQ futures. It got up to a high of 2789. What was that number we were taking a look at? We were taking a look at 2790 and a quarter. You got to give it just a little bit of room. That's at March 28th level. Watch the NASDAQ futures. If it gets back up over that area, and it needs to do that quickly, that says that it should go up and test the highs. If you close below Super Mario's line, all that you are doing is just taking a look at a larger retracement. If we just simply, and it's still an uptrending market for sure, but when you start taking a look at just the trend line, that's got a long way to go to the downside. If we take a look at just simply retracements from the low to the high, the lows I'm talking about are June 4th all the way up to the high established on September 21st out there, 0.382 level, 2704. But it looks to me like if you break Super Mario, you'll go all the way down to that 618 level, right around the 2600 mark. 2601 is the exact number, so right around 2600. That is what you want to be watching today for sure. The next thing to be watching is certainly Apple. And what Apple did yesterday, came down, tested that midpoint, as we were talking about. When you take a look at hammer candles out there, you like to enter trades right around the midpoint to the lower shadow, the lower part of that. On Apple, that would have been the 656. Actually got down yesterday to a level of 661.20. Did it with 20 million shares coming into that hammer swing point with 25 million shares. Apple's going to need more juice to bust it down. But these are the two charts I think you want to pay attention to: the NASDAQ futures and the Apple chart. 877-927-6648. We get back, we'll go see how these markets are going to open. We'll take a look at Tempur-Pedic. They got a restful night's sleep last night. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow up 58 points, S&P's up 6, Composite up 10, small caps up 3, Microsoft down 2 ticks out there, Intel up 18, Google up $8 and change, Cisco up 3, Apple struggling out of the gate here, down $3.45 to start the day, trading out at 661.92. If we take a look at what is popping and what is dropping out there, you got Google up $8 and change, that's up 1%. You got Amazon on the rise, up $3.50, up 1 4/10%. Tempur-Pedic being the big winner out there. They're up 14% this morning, up $3.87. The only news I saw on this, and I didn't really understand it here, let me see if I can pull it up again, is that they are going to do, let's see, where was that news? Some kind of worldwide bed thing. I can't, it's disappeared real quickly. I mean, what doesn't matter. We're going to go take a look at the stock chart and see what that is doing. You got Thor Industries, THO, they're up 7% this morning. Baidu up 1.5%. Monsanto Corp, MON, up 1%. As we take a look at things that are popping to the downside, you got Apple leading the charge, down $3 and change here right now. You've got Dollar General, DG, ticker symbol, they're off 3% this morning. The shareholders want to take some money off the table. So we'll go take a look at that stock chart, see where it is trading. So they're coming out with a new offering, and none of that money is going into the coffers of the company. You got TripAdvisor, TRIP, off a couple percent this morning. Sally Beauty Holdings, SBH, off 2.5%. Royal Dutch Shell down about 0.8% here this morning. Life Partners Holdings, LPHI, off 15%. So that's the biggest percentage drop. And we'll take a look at that. Again, 877-927-6648. Let's go take a look at some of these charts here, the stocks that are popping and dropping. So let's start here. As soon as I can find my little window here, let's go start with Tempur-Pedic. TPX is the ticker symbol. Oh, this stock chart looks horrible. Oh, my goodness, look at this thing. So as we pull this back here, let me just refresh, make sure I've got all of the data. This is certainly not an equity. I suggest they might have gotten a good night's sleep out here, but if you're still in this stock, most people didn't get a good night's sleep. Man, this thing is ugly, folks. When I say ugly, take a look at, you go back to April 18th, 2012. This thing closed out at 87.26, had a high of 87.43, 1.4 million shares. Next morning, got a decent night's sleep. Traded down, got down, did about 3.6 million shares here, but started trading down, closed out at 83.75, and then boom, the next day closed at $66.53. That was your message. It gapped down, did it with volume. When I say volume, 14 million shares. As I go back further on the left-hand side, what you don't see is any other volume bar like that. You come back maybe to a day of 9 million shares on April the 8th. But when you start taking a look at volume bars on the day down, that is where you began seeing institutional selling. The markdown phase on Tempur-Pedic had started right back then. That was April 20th. Again, that closed out at $66. It's trading out today with gapping up at $31. This thing got all the way down to a low on June 7th out at $21.05. Created a three-river Morningstar candle out there, so support on this should be $21.05 here, but don't get in front of this. There's been no signs of strength. Has some decent volume here this morning, only been open for 8 minutes, and it's already done 2 million shares. Yesterday did a total of 1.4 million shares, but as I say, do not get in front of this freight train whatsoever. It looks like Tempur-Pedic is at least going to go back and test the lows out there. I suspect that where it will test is somewhere between 26.88 and 21.05 before it gives you your next piece of information. That was on Tempur-Pedic. Let's go take a look at Amazon. Let's go see what Amazon is doing out here. I've been taking a look at the Amazon chart here for a while. AMZN is the ticker symbol. And excuse me there. Let me pull that back out here. So let's take a look at Amazon. It is trading up this morning out at $253. So let's take a look at Amazon. Let's take a look at any patterns that are out here. Certainly is trading up. Made a high. Well, let me pull this. Let me put this on the longer-term chart first. Let's come take a look at the weekly chart. So as you take a look at the weekly chart, it made a high the week of September 14th, got up to the $264 level. Let's just take a look on the weekly chart. Expansion of swing points. Let's do that by taking the swing point high from October 14th, 2011. That high out there is 246.71, all the way down to the low that was put in on December 30th. The low there was 166.97. The 1.272 area, $268.48. It got up to a high of 264.11. So I would say that's close enough for me to go ahead and do its full expansion here. Backed off last week. Looks to me like we've got a bearish engulfing candle up here at the high. So let's take a look at this. You had on September 14th, the close was 261.27. Where does it open? Last week it opens at 261.25. 2 pennies underneath. It doesn't qualify as a bearish engulfing, but it does qualify as a bear sash candle out there. And you're getting some follow through this week here. To the downside, so far this week it had done 10 million shares. That 10 million shares coming into 16 million shares from September the 17th out there. And this should have some pretty good support at April 27th. The high there, folks, is 228.69, 43 million shares. That's the weekly chart. Now let's go back to the daily, see what we've got going on out here. So moving up this morning, the high, as this thing came off of its highs out here. Biggest volume day is September 21st. The low there would be 256.74. Did 6 million shares on the way down. Tested that 2 trading sessions ago with 4 million shares. Rejected that area. Maybe that's where it's going to go ahead and test again. Again, that level would be the September 21st low would be at 256.74. That is on Amazon. Let's go take a look at, let's see, leading to the downside. There was a big leader to the downside percentage-wise. I'd have to change my little chart thing. I'll do that perhaps during the next break. Let's take a look at leading things down dollar-wise. Not much. You've got Fuller HB Company. FUL is the ticker symbol out here. Let me see here. What does Fuller do? FUL. Let me just go see what this entity does. I'm not familiar with it other than Fuller Brush, and I doubt that that's what that is. HB Fuller Company formulates, manufactures, and markets additives or adhesives, sealants, paints, and other specialty chemical products out there. So maybe they're an OEM of sorts. If we take a look at it, they're trading down about 9% this morning. So let's go see what is behind this move here and what it is doing. FUL is the ticker symbol. And, okay, let's try to get some data out here. There we go. Gapping down this morning, doing it with volume, coming into an area. Okay, so let's go take a look at this thing. This thing had a real sign of a weakness on June 22nd out there. It was a high volume. It didn't totally make the low. The next candle made the swing point low. That area was tested. It's trading back down to that level. Again, the high of that candle, June 22nd, 29.83. You're at 30.50 this morning. Gap down to gap down to 30.28. This thing wants some lower price. So far this morning, it gave you a bearish engulfing candle a couple sessions ago. Let's take a look at 125,000 shares. So not a real liquid type of stock out here. 366,000 shares a couple of days ago. So this thing is not a real liquid stock, but it's had one heck of a nice move out here, that's for sure. Coming off of the lows here, going back into the 2009 time frame. This was at $9 and change, got all the way up to about 34. That was on Fuller HB. Let's go take a look at what else is popping out here. So we've got Google. Google's up about 0.7% up at 581, but that stock chart is kind of leading the charge here inside the NDX and at all-time highs or in that vicinity. And the all-time high out here coming 2 trading sessions ago as it got up to 764.89. You're trading out at 759. Now yesterday had a sideways move. And if you take a look at it, really a strong stock when you consider the 100-point sell-off in the Dow. I think it might have been about a 25 or 45-point sell-off a couple days ago in the NDX. Didn't seem to have a lot of impact on Google out here as it did 6 million shares up at that high. Yesterday does another almost 5.6 million shares. Looks like today that high will be tagged out there. If we do take a look at Google on the longer-term chart, let's go see what patterns are out there. Let's change this to a monthly chart on Google. You can see that what it's doing is it is trying to take out its highs. Now, it doesn't have the volume, and we've got, a couple more trading sessions left in the week, today and tomorrow. Is that correct? Because Monday is, I think Monday is October 1st out there. How about that? Already into October. So you got the monthly charts coming to an end. It's going to be important to watch that on Google as well as a number of equities out there. The number on Google is 747.24. Now, the volume that it had out there was 171 million shares. It's not even come close to that this month. This month here so far, 53 million shares. But if you do close above it, it says it may want to go to new heights out here. Let's go see if there's any AB equals CD patterns inside Google that would have given us any type of confirmed A to B equals CD. That's going to be taking a look at the swing point on the monthly chart that goes back to January 31st, 2010. That's what I'll use as my swing point out there. That did 89 million shares. Let's draw lines on the top, which we already did, as well as the bottom. Let's see, did Google have volume as it came through there? No, it did not. So now the A to B equals CD. If you close above the swing point on the monthly chart, that's the November 30th, 2007. And again, that dollar amount is 747.24. If you do close above it, it says it can drift higher. How much higher? Well, that's where you start taking a look at different patterns that are out here. The larger monthly chart would say 814.93 is where it could trade to. That would just simply be an A to B equals CD. Maybe what Google is doing would be setting up a tiger butterfly. So now let's go take a look at what that butterfly expansion would be. That would be going from the swing point high on November 30th, 2007, all the way down to the low where we started our A point. That was November 30th, 2008, 1 year later, down at the 247.30 level. So now if we take a look at the 1.272 expansion, that would take you into the 883 level. So Google needs to close above 747.24. If it does that, it starts setting up a tiger butterfly on the monthly chart in the 817 to 880 range. That is on the longer term monthly chart out there. Take things one day at a time. Let's go take a look. So we've looked at Google, Tempur-Pedic, and Amazon. Those are the three leaders to the upside out there. We've taken a look at Apple. Let's go back to the Apple chart out here because, as I said, that's an important one for us to take a look at. They're down $3 and change. So let's go take a look at where's Apple? I know it's right in front of my eyes. right in front of there it is. I got it on the 5-minute chart out here. So on a very intraday type chart, but what it's doing, we can take a look at the swing points out there that it was contending with. The first swing point that we would look at, actually the one I'll go take a look at, is the swing point from 9:50 in the morning, September 26th. Let's take a look at both the volume and the price. Those are the lines that I'm drawing across on my screen. I suggest that you do the same because it'll give you a ton of information. So you can see that area, and again, works the same whether you're looking at a 5-minute chart, a 30-minute chart, a daily chart, a weekly chart. It's important to take a look at those swing points. That price being 661.50. It was tested once at 10:40 yesterday. 530,000 shares going against 915 was not enough to bust it down. Came down this morning and tested it immediately off the bat with volume, 971,000 shares. That was going against the 915. Still couldn't bust it down. You had another test. In fact, all it's doing is testing that level here, trying to punch through that area. You had a test at 940. Again, we're looking at the 5-minute chart, 711,000 shares. Then the following, 522. Now we're into the next 5-minute session, ends in a couple minutes here. Only 188,000. Doesn't have the volume to bust it down on the day chart out here. If we go take a look at this on the daily, was it getting down to lows? Really just testing yesterday's low. You still got that hammer out there. Again, the hammer support area on Apple is 656. If you close below that, folks, and you are long, you are wrong. It's just as simple as that out there. You want to pay attention to those hammer candles. If you take a look at where Apple then could trade to, if it busts through that hammer level, 637 and then 596 would be the likely area. That would be the sweet 618. You know, I did mention, that a little less than 24 hours from now, going to have that great workshop, Nadex workshop over at the Grand Hyatt in Tampa. And I did mention that we would go take a look at the trade in gold that we put on Tom, myself, and Daryl on Friday. We did that because was just simply taking a look at a intraday chart out here where it was doing a 1.272 expansion as we were coming into the 10:30 area. Again, you catch the archive of that show on Channel 10 and go just fast forward it to about the 10:30 time frame, and you'll hear the live play-by-play. Speaking of play-by-play, the NFL refs are going to be back in action this evening. That is a good thing out here. What has gold done since that area where we went ahead and we went short gold? Well, it's done an A to B equals CD down. Did a 1 to 1.272 A to B equals CD down. Looks like that was supposed to complete at around 1738.60. Where did it actually get down to yesterday? 738.30. Oh, you gotta love it, folks. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Got the Dow up 42 points now. S&P's up 5, composite up 8, and we were talking and taking a look at gold. Looking at an intraday chart, we've got the 10-minute chart up here on the screen. It completed a 1 to 1.272 A to B equals CD. Now let's take a look at a couple different retracement levels here. You do have gold trading out at 1764. Let's go first. Take a look at it's made 100% move of a move. Okay, and so if you want to take a look at that, you come back in to the general area of swing points right around 6 in the morning or so on September 26th. You had gold out at 1768, got up to a high here during the intraday session at 9 o'clock, got up to 1769.60. Makes 100% move of a move. Once you do that, it's supposed to rest. Why? Because that's the first finish line out here. Works this way on any chart. If we take a look at retracement patterns, let's take a look at the first obvious retracement pattern. That's going to be coming off of the high here, the C point of the A to B equals CD down on the 10-minute chart. That was out at the 1777 level. I suspect we're at a 0.786, and most certainly we are. That was the exact number there, would have been 1769.40, and what we know is that gold punched up to 1771, closed at 1769.40, so it made it, so you had two patterns really coming together at the same price point. You would expect gold to just simply rest here for a bit. Now if we pull this back and we take a look at volume and candles out here, nothing significant, but it did do a 0.786 retracement. Let's go see if it did any other retracement. That would be coming off of our A point. So that's where you really want to also take a look at and be aware of. So we go from the highs in Friday all the way down to the low. That was put in here at about 10:40 in the morning yesterday, September the 26th, out at the 1745 level. Now what you're going to see, how about that? Now what you see, folks, is you also see a 0.618 retracement of that larger area. So that's 1770, the high that we saw here in gold coming into the 9 o'clock session. is a very important high. That may be, all that it is in it for gold. In fact, this would be setting up this would absolutely be setting up a decent gold trade here on the Nadex platform, because your upper part of the range, that has absolutely been established out there. So folks, go to the homepage of TFNN.com. If you haven't had a chance to test the Nadex platform, click on the link out there. You can get an account set up, and make sure if you're in the Tampa area that you sign up for the workshop that's going to be this Saturday. It'd be a great investment in your time. Doesn't cost you anything, and you'll got a pretty good chance of walking away with some high-ho silver out there. So it's a pretty good deal. Let's go take a look at here. We've got a couple of stocks. Let's go take a look at Jazz Pharmaceuticals. I've been waiting for this equity here to pull back, and it just doesn't want to pull back much. JAZZ is the ticker symbol. It's trading up a little bit this morning. This, folks, would be a nice equity if you could buy it right where it broke out. It was looking promising yesterday as it closed inside the breakout candle. That breakout candle being September 17th. The high of that is 56.25. The low is 48.01. That would be a nice buy. That is on Jazz Pharmaceuticals. The stock chart here looks good. This thing was consolidating sideways for quite a period of time out here. And when I say quite a period of time, the consolidation started in January in 2012, so almost for a full year before this thing really broke out, and it broke out on September 18th. So I would put this one on your list. It's certainly on my list as this thing starts, if this equity would go ahead and pull back. Let's put this on the intraday chart and see what we're taking a look at here. We'll put this on a 10-minute real quickly, see if there's an A to B equals CD down. Of course, my system here not cooperating with us as we go into the close. Well, folks, great to be here with you. Certainly there's A to B equals CD. Stay tuned. Tom and I will be up next. Then we go to Kate Stalter from 11 to 12, Larry Pesavento 12 to 1, Daryl Martin 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and none other than the Tom O'Brien Show from 4 to 6. Thanks for being here, folks. It's an attitude of gratitude. I promise you, it'll always work for you. Take care, folks.